Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell for Monday, September 12th. It is 7:04 a.m. as I'm starting the video. And as always, please run your player at 1.5x. A lot of green across the board this morning. Got Bitcoin up 4%, oil up 1%. I think nat gas was up about 1%, and as well as copper. So the commodity complex is up. Equities up at least 0.5%. Look like they're trying to head a little bit higher. A lot of stuff to go over on the macro front. Not a lot for today, but looking out to this week, we've got a important August CPI print tomorrow morning at 8:30. And then Friday, we've got the University of Michigan consumer sentiment. And most importantly, we've got quadruple option expiration on Friday. So that's certainly something to be aware of. And also, we've got the FOMC September meeting next week, where it's highly anticipated they're going to go 75 basis points unless something dramatic happens tomorrow in CPI. But they are going to be dark from now until the meeting, so you're not going to have these guys, coming out on FinTwit and all these other places with their comments and everything to possibly throw the market a curveball with their comments. I think first up, we've got the August CPI before the bell tomorrow. I think it would have to be something really wacky to torpedo the market. I'll have some thoughts on that later this morning when we go over the charts and stuff at the end of the presentation about kind of how to handle today. I do want to remain bullish. The OPEX weeks are usually bullish. Here on the US dollar chart, you can see dollar weakness, and that has been lifting sentiment and relaxing overall market liquidity. So I think with the dollar behaving, we've got a break back below 109. We're here on the bonds, and we've settled in at this 108 support area. But as long as I think if bonds are stable, that's a relative plus. If TLT goes up, that's a relative plus. Why? Because rates would be dropping. The thing that I would just watch for, and alarm is some kind of big break below 108. I think you would feel that in the markets to break this prior low, which means the yields, of course, would be running higher. So that might, if that's going to happen, it's probably going to be tomorrow in reaction to that CPI print. But I think as long as dollar weakness, bond stability are in play, I think those are net positives for the market. And we've had the VIX falling for 3 straight days now. And so if the scenarios that I just laid out come to pass, dollar weakness, stability in the bonds, buoyant for equity prices, I think there's a good chance for VIX to come in and fill this gap down towards 20. And we had talked about that being a possibility back here. I mean, it tried, never could make it. and then we did not reach the upper end of resistance here in the 29 range, kind of found a ceiling more or less at 28 and has rolled over. So now if we can get a couple days of falling VIX, that would be very, very good for equity prices. And so I want to continue to lean bullish this week, unless and until we get some kind of evidence that to the contrary. OISCO level, I mean, you can have your narratives and everything, and we do that every morning, but price changes everything. If there's some kind of wacky CPI tomorrow and the bottom falls out, then you gotta adjust to it. This has been a very nice trade here on Bitcoin. You'll recall Wednesday, Thursday of last week, even possibly on the early part of the week, we had this little baby breakdown below 19,000, and we were talking about, okay, in fact, we had a little segment on Bitcoin with the new trader wanting to know how to trade it, right? And we said that very technically driven, not a lot of fundamentals, is a good barometer of liquidity in the market. And we said on the break back above 19,000, that was a very objective place to get long with a stop really close by. So if you did that, you're up $3,000, right? 19 to 22. So I hope you got that if you're into trading Bitcoin. I mean, that's a really great example of following the technicals. And I'll also point out, notice the big bullish divergence here on PPO momentum. You have some divergence here on RSI, but not nearly as dramatic here. So notice we're at lows over here with lows in momentum here. And then we rally and come back to the same spot, but look where momentum is, way up here. So that shows you buyers under the surface, right? Underlying buying strength and momentum, not in sync with price. So when you get and see those situations on a double bottom low with bull divergence and a recapture of the prior low, in my experience, those are money. There'll be one in a blue moon that gives you a big head fake, but if you can catch those, they're often very, very nice risk reward type trades to take. So be on the lookout for those. As we go on to oil, strong move out of the hole here. Remember, we saw this bad breakdown day. We said, tough place to take a trade because it can go either way. Well, this thing has recovered and recaptured the prior lows. So now, to me, you've got these prior lows as support down around 85, and your next level of resistance is 88. And you can see the very distinct 8 EMA, 20, 50, and 200. This 94 is going to be monumental on any kind of, if there's going to be a sustained move. Notice back here, we broke out of the 200, but the 50 contained it. So here, the moving averages have merged together. And so any kind of breakout above 94, this thing should really be able to go. But first things first, you got to hold 80 85 and then take out 88. And then what would this look like here? That's your bear trap, right? Bear trap, fake breakdown. You broke below all the prior lows. You broke below this volume over price shelf here. Anybody that's looking at charts or any kind of technician, that we talked about it, that's your short entry. And they reversed it. And once you saw price break back above into the old range, then you got to take that short off, and then that's more fuel to the fire to the upside. Now, remember our other trading tenets. When you break out of a range and then you come back into the old trading range, your target is the far side of the range. So just as a thumbnail technical target, I would be looking for 94. And while we're on the topic of oil, I think there was some news out on Oxy that Warren has bought even more. I think he's taken the thing private. I mean, he's up to 57%, and has made all the regulatory filings to, on his last round, he filed to go over 50%. And now I guess he's, marching towards 60%. So whether he leaves a few percent out there or whatever, he's effectively got control of the company now, holding 57%. So there may be outsized activity there. Oscillators. I think we played this pretty well. We were reluctant to pile in short with everybody else with the oscillator stretched. We've had a nice recovery bounce up to the middle of the range. Not particularly useful in terms of direction here, but with all the other factors that I've already mentioned, I'm expecting NYMO to go higher, and it really wouldn't take much of a move to rip this thing up to overbought in the next few days. I was doing some work over the weekend, saw a lot of still people got very, very bearish there on that last turn down here, and we know that we got option expiration Friday. I think the market's going to conspire to number one, not let all those people win. Number two, potentially squeeze them out. So those are additional factors in the potential to, drive this market higher over the next few days. Here's NASDAQ oscillator, same exact look. Blown out to the bottom, recovery to the midpoint with a very good chance that we run up to overbought. It would look a lot like this one here. Blown out, rip, and then push. And really, when you look at a lot of these, it follows that format. Here's one, oversold. Very short period of time, overbought. Oversold, overbought. Here we didn't quite get overbought, but it was a nice move off the lows. Oversold, overbought. So you can see that's the normal cycle of these oscillators, to get blown out on one side or the other, then make their way down to the other side of the oscillation. Okay, on SPY, nice day, 1.55% on Friday. I've got the pivot here at 402.50, but what you can do is you can see, depending on how tight you want to, trade your positions, you do have 20 EMA and 50 EMA support here at 404.50. So if there's any kind of a wobble and you get a pull in to these moving averages, they should act as support. And then I've got resistance at 410 and 415. That's our largest volume over price bar, and where we've had price reactions along those lines. So I think it will get marginally tougher as we get into 410, and certainly 415. You get a break above 415, you're going to go back up here, fill this gap, and most likely test this 427.50 up here where the 200 simple is. Here we are on the 60-minute chart. Same exact look, just exploded a little bit. We're right here at the top of this. What was resistance is now support zone. We've taken out the 60-minute downtrend line, which is always a positive. So now if we can hold 407, make a run towards 410 and make some progress, we could certainly get up into the 412 to 415 range. Now, as part of your strategy today, I want you to think about this. We know we got that CPI print in the morning, right, tomorrow morning at 8:30. So if things go well today and price makes an up move, I mean, whether it's 410 or 412 or, whatever it does, and, you've been long from down here, or even get long, on the open, and you go from 407 to 412, what I'd like you to do is adopt a somewhat defensive posture heading into tomorrow morning, just as a precautionary measure, and kind of level up your positions. What do I mean by that? If you were long 407 calls and now you're sitting at 412 deep in the money, you could roll those up to 412 and make a little run to the bank. You could sell 415s or something higher as a way to express that bit of defensiveness, takes them off the table by creating a spread. If we have a good day today, my plan would be to stay long with bullish factors outweighing bearish factors, but at even money, not deep in the money, looking for more, because if we do get a pullback, it'll happen pre-market and you're not going to be able to do anything. But then what we can do is look on any pullback tomorrow as a place to potentially add for the end of the week. So I like that. I like that strategy. Notice here on the Qs that we're in this little resistance area between 305 and 310. And notice that, relatively speaking, Qs are a little bit behind SPY. Why? Because in the case of the Qs, price is just below the 20 and the 50, whereas on SPY, price has already taken out those moving averages. So this morning, I'd be focused on a recapture of these moving averages and a recapture of 310 to give more bullish signals on the Qs. On the 1 hour chart, you can see on Friday, we made the big impulsive move, and then we kind of died into the close, taking out the downtrend line, which is positive, and sitting right here at this 307 level. Now I do have marked here a void with the next target being 312, but just realize that, well, it's not too bad actually. The 50, the 50 comes in at 307.90. So you're going to have a little resistance here. But after that, I think you can get a faster move up towards 310, 312 because you do not have a ton of traffic in that little void in the charts. So I think that would be a nice trade to be long. IWM, challenging this high volume over price bar here. Finished the day right at resistance at basically 188. That would be my pivot for today. You've got a little traffic here at 191, but I think once it breaks free of this, you're going to go up and tag either the 200 exponential or the 200 simple moving averages there. And notice how PPO is curling right near the zero line. If we have a good day today, get a bull cross happening on PPO right near the zero line, I think that would bode really well for a continued up move. Here on the 60-minute chart, same look. We're right here at the downtrend line. I think we've taken it out. Keep in mind that on a lot of these charts, I haven't called it out, but we do have a gap below to fill from Friday. So I think on IWM, above 187, you can be looking for 190. I think it gets a little harder between 190 and 190, 150 because more or less at the top end of this value range, and you had support, bunch of support in here, and now that will act as resistance at 190. So may get a little tougher there today or at some point in the future. Meta really had a gap and go on Friday, was able to come up and really take out this trading range. So now I think your pivot's 169, and I think the most important level on this chart right now is 172. Why? Because that has been the super important level going back months and months, where it acted as resistance. We had a bull trap, came down, pinned it below resistance, had another bull trap, and now had a resistance here, and now we're coming back up to 172. If if you got long down in here or on the breakout of the downtrend line, I think you're in good shape. You may want to roll that up and take some to the bank. If you get long here in the morning and you're sensing an up move and you get into 172 and you move above it, I think that's a perfect place to roll up your strikes, because then you've got you're recalibrating against this big pivot here at 172, and then you can look forward to a fill of this gap, a potential run up to 176, and then up towards 180. So if that plays out, that would work out really well. Apple, I think this is pretty simple right here. You've got a pivot at 157.50 with the target being 159.50, and then you've got a downtrend line coming off of these highs as a resistance up in the 161 area. But this looks like nice basing action. The bears had a lot of opportunity to break this all through here. Here was your little fake breakdown, your little baby bear trap, everybody got short right here, and then they bought it back up. So these guys obviously thought knew they were wrong on that break above. So notice too that on PPO and RSI breaking into positive territory. So that is positive news. Tesla has been on a nice little run, coming off the double bottom low, taking out 280, taking out 287, which were prior places where resistance had shown to be a problem. Gap and go on Friday, took out 295. Now, kind of in no man's land. I think it's got to get up to 302.50. That's the next target. I ended up holding my, I had been in most of this, and so I rolled up to 300 calls for Friday. See if we can get a push here. And then above 302, moving into this old trading range, your target becomes the far side of the box up towards 310, 312. So Tesla has been working well. Microsoft broke above 264. I think you've got a pretty clear level here, a little above 266, and then 270 as your upside targets. I held that one as well. We got a good initial move, but then it kind of built a flag here. The good news there is it was above resistance. They built a flag above the resistance level, which makes it now support. So my plan there is just to stay long against 364 and hope that we can get a fast run up towards 270. Amazon, gap and go. You can see the congestion here from last month between 133 and 134.50. Little resistance area. But if you're not in it, I'd certainly have 134.50 alarmed, because a break above there gives you some running room up to this prior high at 138. That would be a nice little hit and run trade up to that level. And then if you got lucky enough or good enough to get that, then you could roll your stops or your strikes up to 138 and then look for 131. Google kind of played out the way we thought. Not that it wouldn't have been a good trade, it's up 2%, but we thought this area here would be kind of difficult. So now you can see that a break above 111 opens the door to 112 and then 113.50. The good news on Friday, aside from the gain, is that price took out the 60-minute downtrend line on Google. So that that was a technical buy in itself. Netflix. Right here at the moment of truth, you can see that we've had 5 moment of truths before, all rejected. Right here at this gap between 234 and 240. I held a position over the weekend in 235 calls, just hoping that that's pops out. But resistance is resistance until it's taken out. So from a technical standpoint, that was front running a signal that you hope to have happen but didn't happen. But what I've seen a lot of times in these types of setups is price will come up to a level, and then in the pre-market jump jump over the resistance, say open and, 237, 238 kind of thing. And then that frustrates the most amount of people, right? If you wanted to get long, you're going to say, okay, well, I'll wait till, I'll wait till I get the breakout into the gap and then I'll get long. And then you got people here just also, well, stands to reason with all these rejections, I want to be short, right? Short against resistance. That's an objective trade. So what happens? They gap it above resistance. So the people that wanted to get long are frustrated because they weren't able to buy it at 234. And then the people that were short are frustrated and losing money because they probably set their stop, just like right above 234, but then price jumped over everything. So now they're hung in a losing position with no easy way to get out of it. So anyways, that was my thinking on Netflix. SMH, I think it's clear to me that 218 is your pivot for today. You've got a downtrend line here at about 220 to contend with, and then you've got a $3. Well, actually, that gap's been filled, but you've got old levels here at 222 and 225 that price will most likely have memory for if and when it gets up there. I did see a little news flash that the U.S. is now clamping down on semiconductor equipment manufacturing, selling into China. What are the names? Lam Research. What are they? Mine's drawn a blank. We all know who they are, but I can't come up with the names. Anyhow, you might see some downward pressure on semiconductor equipment manufacturers this morning on that news, and that may have some drag on semis as well. So be aware of that. Quickly through ARC. Nice days on Friday, as you'd imagine. ARC came down here. Undercut the midpoint, now is testing the top of the box. If you have not participated in this, I think you still have a good opportunity here. If you get a breakout in ARC F above this trading range, then you can simply use that as your pivot and look for 2050 and then 23 on the upside if things get incrementally bullish. And you can see that price has recovered the 8, 20, and 50-day moving averages, which is always a good thing. Same exact setup with ARC-G. Came down here, found good support at 34. Now we're back to 38. 8, 20, and 50-day moving averages have all been recaptured. I think if you can get a breakout here above 38, nothing's a sure thing, but my target would be 43, and that ain't all bad. It'd be the prior high, and then you've got the 200 moving, falling 200, which if things continue to get bullish, that would be your next level of resistance above 43, wherever the 200 happens to come in whenever price gets up there, maybe down around 44, something like that. So ARC-G is looking a lot better. Flagship fund, a little bit behind the others. Why? Here price still below the 50, and actually you've got a double layer of resistance. Why? You got the exponential moving average here, and then you've got the top of this old trading range. You see the line of resistance, 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 resistance here, resistance, resistance. So that would make a breakout above 46 not only more impressive, but more important, because then all of this and the moving averages become support. And then you can look for 5250 as your first target on that move. Also, some nice horsepower on Friday. Market was 2%. You got 4% out of ARK, so that is nice. And then ARKW has been lagging all along, but still making progress. You see, recaptured the midpoint here at 5250. Still has the 50 here. It comes in at 55.5, and then you've got the top of the box here up towards 59. So those would be my targets on the upside if you had bought down at lower levels. And then if you get a breakout here above 59, this prior level, then you can look for the prior highs here as your first target at 65, and then your second target will be up towards 67.50. So wrapping up here, as we hit the 36-minute mark, I think the setup is still bullish. Weaker dollar, stable bonds, big option expiration, FOMC dark, oscillators racing towards overbought, with the caveat, anything can happen on CPI, but I think the risk is going to be, I think the reward potential is favorable versus the risk tomorrow, especially if you roll up your positions today. If things work out well and you get some positions into the money, I would roll those up to even money and then play CPI neutral, stay long into CPI, and then we'll see what happens towards the back half of the week. But I'm looking for a good week, and then the following week, all bets are off. Why? Because you have that big options expiration roll off. You're in the back half of September and into October, which historically has not been very kind to equity markets. You got the FOMC on Wednesday, and then things get a little foggier. But we got to get through this week, and I'm relatively bullish this week, so we'll deal with next week when it comes. So I hope you guys have a good day of trading. If you're new to the channel, you know what to do. Hit the subscribe button, the alarm bell, to get the YouTube content. Over in the show notes, you'll see a link to the blog site where you can drop in your email address and then get all my content delivered directly to you whenever I have a trade idea, market observation, special video, anything at all. You will get that right in your box, and you'll also get an invitation to our trading room, and we'd love to have you there. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.